What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm actually going to do something I haven't done in a while, is go through my Lofty portfolio, talk about just the Lofty market in general, and then what I own, how I've done so far. One of the reasons I do this every month for Mogul, and I started doing it every month for ARC 7, is they make it really easy to do that. They give you a report, you know exactly how much you made that month. They present a lot of numbers to you in an easily digestible format. Lofty doesn't do that, especially when you take into account trading on Lofty. And so that's why I haven't really done this on a regular basis. Lofty Assist does provide some good tools for this, so I might start doing this a little bit more often, depending on, I don't know, just if people find it useful. But I know, especially, but that's why, I haven't done it as regularly here. If you think about like Lofty's dashboard, if I wanted to tell you how I did last month based on anything on here, I have just no idea how I don't think I'd do it. I'd have to just put it all together by myself. Same thing, like, okay, I can tell you all the money I've ever made with the liquidity pools. And actually, I believe this number is not accurate. But if I wanted to do that, I would just have to look at this page, right? But I couldn't tell you what I made last week or yesterday or even today. There's just no way to do it. So that's one of the reasons why I just haven't really done this very much. There's going to be a lot of me complaining about Lofty. That's just, I just can't talk about them without getting a little bit frustrated. I just think that they have such they've created something that could be amazing. And have just made so many little decisions that have made it just very tough to want to leave money on this platform. But let's say, okay, since the last time I talked about their average token price, it has gone up a little bit. So it's $32.99, which means, what does that mean? 17, 34. So the average person, if you bought at $50, ignoring fees, you've lost 34% in value, if you liquidated today. So still an amazing value destruction system, right? They're virtually any property that you put onto Lofty ends up being worth less as little pieces than it is in the aggregate. It's not 100% true. There are some that are over $50. But some of those might have actually just appreciated in real life as well. So but yeah, tremendous loss of value by tokenizing here, which normally you think the opposite, right? People buy wholesale, sell retail, right? They buy in big, buy the property whole, sell it in pieces is a way to make money. Typically, people do it with land. Buy a big piece of land, you chop it up into lots, you sell them, they're worth more. You buy big apartment buildings, sell it as condos, they're typically worth more, right? That's why there's a lot of, condo conversion projects. But all sorts of things like that. People buy, it happens not even just in real estate, but in general, right? You buy in bulk, you expect a discount. So when you buy the whole property, you think, okay, I should be able to sell individual pieces for more than the sum of those pieces should be slightly more than the property. If everything, if there's trust in the system, if there's efficiency, if it's done right, there's all these things. So far, we haven't seen that shake out on really any of the fractional real estate platforms when it comes to looking at the secondary market once they start selling. But Lofty has been one of the ones with the deepest discounts. There is Arrived secondary market is open right now. I haven't even taken a look. That's another one where I've heard there's better discounts this time. And I just haven't been on top of it. There's been a lot going on. But so anyway, a lot of value destruction there. But not as much. I think this had gotten down to $31 the last time I had looked at it. What else did I want to talk about Lofty overall? Total market cap has gone down. Average token price, it's come up from the bottom, which was around, $30 and change. Most of the properties are in this $20 to $40 range. Very few, or there's more between 50 and 60, but most of these I think are right at just about 50. The fact that there are 4 above 60 is kind of amazing. but it's a small minority, right? I mean, you just expect, like, especially with properties that have been on there for a while and real estate values. I guess in some markets they have gone down over the last year, but most of these have been on the platform during a period of time where they should have seen some appreciation. Value locked in liquidity pools is down. One thing you can see, there was huge sell-off August and September, but now, these, the red lines indicate there's more selling than buying. The green lines more buying than selling. So it's stabilized, and there's a little bit more buying now than there had been, right? Like, buying is beating selling, which is a good sign. If you watched Jerry talk on YouTube, he did I think he's calling them town halls, maybe about a week ago now. He did acknowledge one of the things that he had actually came out and said was like, look, we've realized that a lot of the properties, they're worth less as tokens than they are worth in real life. So to get your money, to maximize your profit, you'd have to sell in real life. I mean, he basically acknowledged that, which has been my take since I got on this platform, right? And I'm going to show you I've made decent returns by doing that, buying discounted tokens, pushing to sell the property in real life. But the platform doesn't survive if that continues to be true, right? I mean, there's no benefit. People that bring properties onto the platform don't. It doesn't work. It doesn't work for users, right? I mean, it works for people that come here after it's been sold at $50, but it doesn't work out overall. If that continues to be true, you have to figure out how to make the sum of the tokens equal at least true market value, if not more, before being a problem. And he acknowledged a couple of issues that they've had that I thought was helpful. Talked about how they needed to do some additional due diligence before they launch properties. I think he's right. I think probably they should do more even than the things that he's talking about. One of the things, and I've complained about this a lot, is I think they just need a real estate person on their team. I think they need someone that actually has experience, because there's a lot of times they've made these small decisions, or what they think of as like not really major decisions, or we'll let people do it how they want. Like, if, for example, how co-owners were bringing properties to the platform, but they were maintaining the debt outside of the DAO. And he actually mentioned that as one of the things that they can't let happen anymore, because that creates a problem. But I think if you asked anybody with any experience in the industry before they started doing that, I mean, I've been complaining about that since day one. So I think that every time they're going to try to change stuff, they should really talk to some people with experience, and not just like sort of, oh, well, let's just experiment. Oh, we lost a bunch of people money. Or a bunch of people got scammed. Like, there's just most of the problems that we've seen on this platform could have been completely avoided if somebody had asked somebody like me, hey, we're going to do this. What problems do you see coming up because of it? And not me being just anybody with, in real estate investing experience over a long period of time, been involved with a lot of transactions, understands, how things work in this industry, right? I mean, so that's been something that I have thought from day one. And I really think until they do that, they're probably going to keep making these mistakes that really, as they shift and change things, because it's really hard to recreate an industry that you don't know anything about. And I mean, I think it's just been clear that from the types of decisions that they make, that's sort of the situation that they've been in. So anyway, that's really all I'm gonna, but I think it's good that, okay, they acknowledge they have these issues. They're going to try to, there's basically each time they run into a big problem, they're like, okay, let's fix this. In hindsight, this isn't something that, that's a phrase Jerry uses a lot, in hindsight. But when it's things that I think were blatantly obvious to a lot of us, we're going to be a problem. But okay, let's just fix these things going forward. And I think, I think it makes some sense, because they're trying to recreate the wheel in a certain sense. But on the flip side, there's a lot of this that's not really new, right? I mean, people have been syndicating properties. There's REITs have existed. Like, most of what we're trying to do here isn't that new, right? We're just introducing blockchain, so that you can do it on so you can sell your shares more easily and all this, but it's not. So I think that especially the stuff that's really just about the real estate and the debt structure and different things like that, I think could have been avoided. And hopefully they will be going forward, though, right? I mean, it does make me feel a little more confident that he says, okay, we're not doing that debt structure anymore that we were doing with co-ownership properties. We're going to do some due diligence as far as do the co-owners have their bills paid so we don't have another Umland situation. I think he even mentioned doing more due diligence on the co-owners, which I think makes sense. In my mind, the co-owner structure doesn't make a ton of sense because of the fact that they want you to you can't ever be completely out of the property. And so, I think it makes perfect sense that, okay, you want to lock it up for a certain period of time so you don't just have people dumping properties. But to say you can never sell your last 10%, seems problematic to me, right? I mean, I guess maybe then sometime in the future you just push for a sale, but I don't know. I'm not sure. I'm not sure I like it. I understand the problem they're trying to address. I think that there's other ways. I don't. One, if it lets you sell 90% of your equity, it's not necessarily putting you in the same. Leaving you with enough skin in the game that they're hoping anyway, if you're selling for a big premium over what you had before. Oh, the other thing he mentioned, though, and I really like this, is he's not you're just selling for whatever the appraised value is. That's going to be the par value. You can't, no more of this 5% over appraised value as par, which I think that makes a ton of sense. And then if people want to buy those tokens from you for more than $50, well, then that's awesome. But, making that the par value, I think makes sense. So that was, I think, a good change. Let's see. So getting into my portfolio, I've got 20, and this is, again, I'm on Lofty Assist, and I'm just looking at my account summary or my, that's just what it's called, the account summary. I had asked Limas about changing this yield to to a weighted yield, and this one seems like it's still maybe not right to me. I'm not sure because I was expecting something that looks more like this 0.84% APY. My guess is maybe this calculates it based on a different token value. I'm not sure. I really don't know. But so anyway, at the moment I've got about 33,000 invested on here. It says the current value is 30,000. I want to actually go over my profit on here first and then go through a couple of things because, I keep talking about, I'm doing really well on here. And I know that it doesn't, if you look at this, it doesn't look like it, right? Okay, I have terrible current yield. Average trailing yield isn't great. How am I actually making money? So if you look at, this is the wallet scan with my wallet. If you look at your closed positions, this is like everything that you're completely sold out of. And so this is where I've made most of my profit on here. Made $6,638, which is an 18% return based on what I put in to these ones. And that's not annualized. That's just a straight return. I've been on Lofty over a year now, but most of the money I invested wasn't immediately. So probably if you annualize it, it would look something similar to this at this point because most of the money went on later. Some of it came off already. It's okay. $6,638 from closed sales. So that's a big portion of my profit from there. When I look at my total rents I received, I actually just pulled that number from the dashboard. I think this is an accurate number. It seems to move whenever I get rents. So I just use that in there. The staking rewards, I looked at Lofty's, total lending, and I think that this leaves out, this is just each time you claim a reward here, but it leaves out so there's certain times when you stake into a liquidity pool and then if you unstake at a certain time, you get more money, you get credit for more USDC, and that doesn't seem to show up in those rewards. And so I've done that. Oh, I'm looking at the wrong one. That's staked USDC. So I've done that a couple times. I did it on Frederick Boulevard and I did it on Denison, and that's how Lofty Assist picks them up with this extra little added money here. And that seems to be about the difference between what I think I made on there and what Lofty does is just those couple of transactions where I got there. So $731 from staking. I made a total of $8,854. I invested somewhere around $40,000. It's tough to. I've put money on and taken money off on several occasions, so that I'm just kind of using that as a round number. It hasn't been, none of that has been on the whole time. I took a chunk off when we sold the Dallas Fort Worth property. I can't even think of what that property was called. But when that one was sold, I took a chunk off. I just took another chunk off when we had LeClaire. I don't think that I ever put more than 40 on, though. I actually think it was a little bit less. But at one point in time, my account value was showing in the 50s, the high 50s, but it wasn't really accurate. So I think that this is somewhat correct. I mean, it's. I'd have to go back, and this is what I'm talking about, how I don't like it's not, there's no easy way for me to see this. I can see my account value. Like, it would be great to know the total that I've ever moved on, to be able to look at transactions. Like when I go in their transactions tab, it's just ugly. But anyway, that's, once the secondary markets are really up to speed on the other platforms, who knows? I mean, maybe they'll be equally as terrible. But so overall, it looks like I've made about a 22% return. What I'm ignoring at the moment from this is where my open positions, it shows at the moment that I've lost $2,000. This is showing, if from what I've paid on these tokens to what the tokens are worth today. And so if you look at, for example, it thinks I've lost $1,000 on Raymond. Well, yeah, if I sold these tokens today, I will have lost $1,000 on it. But we're in the process of, I bought these tokens. My cost basis is super low. And on Lofty Assist, this cost basis includes all my fees, right? It's not just the token. So this is the token price plus the fees. My cost basis, $20. We're in the process of evicting the tenant, but I believe once we sell this, I'm going to net more than $20 on this one. And if I do, I don't have a loss. I'll actually make a profit on it. Now, obviously, I could be wrong about that. But that's why I think that these unrealized gains and losses don't make sense to really count at the moment. Now, when it's one that, maybe I could sell those tokens today and make a profit, well, that'd be nice, like Winkler. But I think some of these have trading canceled. So until it's sold in real life, or trading frozen until it's sold in real life, I won't know. The universal lending DAO is one that, it shows that I made a profit, relative to the current share price. I actually think my profit's bigger than this, right? Because I think the current share price is lower than it should be. I think there's more value in the universal lending DAO, than, whatever the current token price is, like 44 or 45 or something. I guess it must be. Oh, wait, what does it say? 52.21 per share. That's interesting. Well, I don't know if it's worth that much. So, anyway, I'm not completely sure how it's coming up with this value, because this isn't the current token price. Maybe it's actually looking at the real world value, because this is high too. I'm gonna have to ask because I don't remember. But anyway, I think this is one where, especially if Pleb continues to be on top of it, it's just loans, right? And there's an interest rate attached, and most of the properties that the loans are to should be able to pay it back, at least, even if it's liquidated. So, and as the interest continues to accrue, I expect that we get paid back on most of those, right? So, I don't know. I think there's money to be made there. The Winkler one, this is one I think we're trying to sell. And again, I think there will be a profit, but I don't know exactly what it is. Sarah, I think actually is a loss, right? I think this one, I paid too much per token. We actually tried to sell it this year. I think we would have gotten $16 net per token, but we were able to rent it out And so we'll just leave it like that. 51st Street in Kansas City. This is one where we do have it under contract to sell. I think I'm going to make a few bucks per token on it, and I've got 80 tokens. So I don't think it's going to end up being a loss. I think it's going to be a small profit. And that's what I'm talking about. That's why these unrealized gains and losses, I don't think make a ton of sense. And there are two columns, right? Because one of them is the profit and losses. Like if I've already, the difference between them is one of it includes if I've already bought and sold some of the tokens and made some profit from there, I believe is what's going on there. Yeah, the 90 Madison ones, actually, I think I probably overpaid for these. These were back, I bought those back when Earl's properties all had a significant premium to the market. I just don't know that we'll ever get back there, and it's not his properties. I think Lofty is just going to struggle to, I think that so much trust has been lost in the system. Lots of the big wallets left the platform. I'm just not counting on it. So yeah, maybe this one will be a loss, but it's also one where, I don't mind holding this for a very long time. And I think that, I'll eventually start to get some yield again on it. I think that same story is true for the Ridgetop Ave, which is one of Ario's properties. This was one of my most consistent yielders for a while. It's a little bit lower now, but I think the token price is weirdly low. I'm not really sure why, but yeah, it's one that I'll hold for a while, and it's also one that I get a lot of my trading rewards from because there's not a lot of those tokens staked. This is another Earl property. Like this Lipford one, I think, it actually shows a profit here. This is another one we're working on selling in real life. I believe I'm going to make a profit. I might, it's not going to be huge. It's going to be pretty close. Nash, I think once we sell this one, this will be in the money, not a loss. The Ohio 3 property package, again, I think. So I think we're selling one of the properties, and then maybe we're starting to talk about selling another one. Again, I think there's money to be made once those are liquidated. Maybe as long as they stay as tokens, it will be a loss. And so that's one of the things that it's interesting that I just would like to see more and more of these sell, because it's the only way we're actually going to get to where we've made a good chunk of money on any of them. That's my impression, right? It seems, unless there is a massive shift in the way that Lofty operates, I just don't see token price. I was somewhat hopeful that when the Leclerc redemption happened, that there'd be a bigger pop in token prices, because a lot of people had money, right? I mean, there's $2 million that got sent back to investors. But I think the vast majority of that money, like mine, didn't make it back on the platform. And that was, if that's what happened, with that money. I just don't see what the next catalyst is to really move things in the right direction. I think it's going to be a long, and if Lofty does keep making these small improvements, I think they might get there, but it will be a very long slog, and it won't be, because I feel this is a very risky platform, I don't think it will be worth it. I think the only way to get a good, risk-adjusted return is by just getting these things sold with a nice pop in income. And the 22% that I've made so far, I'm pretty happy with that. I think that's for the risk I'm taking here. I think that's reasonable. This is an Austin vacation rental. The value of Austin properties has dipped quite a bit, so maybe this will be a loss. It's showing like a small gain right now, but it also has been one, even though it's not, there's no cash flow right now or very little, it's been one that has been relatively consistent. So one of the few that I would want to hold for a longer term. This is one of Alex or Walix. And I bought it at a premium. Another one that so it is a loss, but it's been a good cash flower for most of the time that I've held it, and I just expect it to continue. Umland Circle. This is the one that had the the huge unpaid water bill. There's some questions on whether or not the co-owner is making the mortgage payments or will continue to. We know they've been behind, at different points in time. But you can see my basis is just so low. I mean, this is, again, the basis including fees. Yes, it says that I'm making a little loss, but I just think that if we sell this in real life, even if we have to fire sale it, it's hard to imagine that this is a loss at this token price. And so I picked up one more today with the rent that had accumulated in my account. 9 Country Club Lane. I think this one's really going to pop once that staycation show runs. I just imagine a lot of people are going to want to book it, and that seems like a catalyst for this one to have at least a real good year. Maybe a couple years, because of it, maybe even more. I don't know if that show, I don't know how popular that show is. I don't think I've ever watched it, but I had heard of it before. So I think that'll help. And, at the current token price just seems really low when I look at where, I think 50 was probably high, but I think 26 was low. So, to say this one's currently a loss seems absurd to me. But, it is because of the way. I understand why Lofty Assists, is actually spitting it out as a loss, but I think it's not going to be one. And this is why all these unrealized ones, I'm just not counting in my overall profit calculation. I believe there's built-in profit in a lot of these. Colfax is one. I think this is, I don't know. I don't remember exactly how much, but there's cash in this entity that's worth probably at least a third of the token value right now. So this, that one I think is, once that property gets sold, we'll have additional cash there. And then we'll have one building left because there was 2 buildings in here. Probably the best thing to do is to sell the other one too, because there's just been so many problems. And if we do that, I think liquidation, we're making, I want to say Earl had put out an NAV somewhere over $40 on this, in this one. And if that's true, that's a double on here, which would be nice. This little condo is one I've gotten quite a bit, a pretty steady cash on cash return. It's, I paid a little bit too much for it probably. But it's been stable and, not terrible. Sangamon is a duplex that the cash flow just keeps stopping on from different, trying to rebuild the reserve and have big expenses. It's one that I've bought lots of different times at $22 and sold quite a few different times when it gets over 30. So I've made a decent amount on purchases and sales of this. Currently, I own it again. Where my most recent purchases were at $22.74. This says I own 3 tokens of this. I don't actually. I think this property sold in real life too. I need to figure out how to get that fixed. It was one where Lofty had to do a manual redemption, so it's out of my account. But it's because those 3 tokens were trapped. This one's showing up as a loss. Alcott. This is a 4-plex in Denver. I just don't see it, right? Like, I think they actually have a new appraisal maybe, or maybe not. Maybe it was just like the Zillow or Redfin or something. It shows that this property has gone up in value. So this is one I think I was pretty happy with it at the purchase price, at par value. I probably should have bought more, but you can see most of what I'm buying are the deep discounts, right? It's not a whole lot of the buy and hold for a long period of time. This is another one that I did that manual redemption, so it shouldn't be in there. Walker and Peoria, I just have the 1 token trapped, so neither of those really, I sold basically everything except for the trap token. So you can see, like on this one on Peoria, it says, I've made $394 in profit, and I've got just 1 sitting here. But they're going to be trapped probably for a very long time. And so that's part of the problem with going through all of that. Why, if I tried to tell you, okay, how did I do this month? Well, if I'm looking at, if most of my profit again is coming from, more than 3/4 of my profit came from sales, right? There's not a place where Lofty's tracking, okay, each month, how much did I make off of trading revenue? And if I can't do that, well, then that's most of my profit. It's really hard for me to do these updates on sort of any regular basis in a way that's useful without me. I mean, obviously I could track it as well. It just seems, it's not a lot of money. It's like, it seems like it would be an absurd amount of work to keep track of in a way that I was doing it early on. And then when Lofty Assist put out their, where this wallet scan thing where you can actually like go through all of your transactions, it made it so it was kind of redundant for me to just have a record of everything. I don't know. Maybe I should do that. If you think that'd be useful, if I actually like tracked all of my trading profits and losses on a monthly basis, plus my rents and shared that, I might be persuaded to do that. I don't know. You guys can tell I haven't had the time to devote to this stuff that I wanted to recently. Hopefully I'll get to where I'm doing a little bit more of this again. But I've spent a lot of time just talking to people about new platforms coming out, looking at stuff. A lot of the stuff I can't share yet, but because it's not my baby, right? And I've told people, if you're thinking about a platform, you want to build something, you want to run it by me, I'm happy to talk to people, give you some thoughts on it, and keep stuff quiet until it's time to actually talk about it. Because I do, the whole goal is to just, before I forget, but please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on all of those links, and any of the properties that you see me talk about. Just because I buy them doesn't mean that you should. It doesn't mean it's the right investment for you. Also in the description of this video, I have a link set up to the Discord. Please feel free to join that. If somebody who looks like me is trying to talk to you in there but sell you something, that's not me. Please report them. And that's all about that. But yeah, the whole goal is to just get this community and this industry to really put out products that are going to make us all money, right? I just want to be able to sit on the couch, buy pieces of properties all over the country, make a good return. And Lofty is meeting that, right? Like I made a decent return. I think if I put one of the problems, and I've talked about this before, I think if I put 400,000 instead of just the 40 that I had on here, I never could have made that same percent profit, because of slippage. As you buy more, it moves the price up, and as you sell more, it moves the price down. So it would have been a much bigger struggle to hit those types of return numbers. And I just don't think it shouldn't be like, this is not what I want. As far as when I think of fractional real estate investing, I wasn't expecting to be flipping properties, right? I wasn't thinking, okay, I'm going to be buying little pieces of these and then we try to push to sell it in real life and half the owners don't want to sell and lots of people are unhappy. If I wanted a flipping product, Saul's Lot looked really good for that. But it seems like they've kind of slowed down, with that direction. But if I want just a buy and hold stable income asset, Lofty is just not that right now. That's what I think that is the most attractive to the majority of people looking at fractional real estate investing. Yeah, I want a current yield. I want to be hands off. I want, and then I want appreciation over the long term. I want some tax benefits, all that stuff, right? And so, I don't know where I'm going with that. Basically, this is where my portfolio stands on Lofty. Yes, I'm making decent returns. Still not excited about the platform. I have a couple more properties. So I mentioned several of these properties. I'm looking at the transactions. So ones that I'm hoping to sell sometime this year. 7014 Raymond. Just will take the money off when that happens. I think Winkler, again, we'll just take the money off when that happens. 51 Street Court, 51st Court. I think I said that before too. Obviously, it's late. It's 4:30 in the morning. But anyway, this one, once it sells, that money's coming off of here. Lipford, once that sells, that'll come off. Those are all the ones that are like imminent. But those are pretty big chunks, right? Like this is my largest position currently on Lofty. That one's not too big. That's a bigger one for me. So I might reinvest a little bit of it, but overall, I think I'm just going to pull it off because it is it's it might be where I can make a decent return on investment, but it's not a great return on my time. The amount of time I spent on Lofty to make $8,854 is absurd, right? Like I spent a ton of time on this platform last year, much less so this year. Talking to people in Discord, trying to help move properties in a certain direction, looking for cheap deals to buy. So I think that's the other issue that I have with Lofty. It's not a great return on time or a great return on frustration, right? Like that's why I'm still slowly moving money off. There'll probably be a few that I'll just keep for the long term. I'll probably hold on to Earl's properties as long as he's running them and as long as they're still doing fine. And then the universal lending dial will probably leave money in there as long as Pleb's running it and it seems like it's going in the right direction. For no, because I still want to support this ecosystem, right? I would still love to see Lofty succeed. And I'm willing to change my mind on it tomorrow if there's significant changes that make me feel that it's, one of the things that is, I've mentioned this a few times, like the fact that it's hard to keep track of everything going on isn't great. I know my tax forms last year they weren't correct. They did mention they're going to have correct tax forms this year. I'm not super confident that that's going to be the case, but hopefully so. It's just they don't have, for wanting to be like this premier marketplace, and that's all they do is be a marketplace. They don't have a great user interface for us to really keep track of like how our trading's going on a monthly basis. How, there's no like good report system where I can see different stuff like that at all. I don't think. I'm not really sure. And I guess maybe they think, well, Lofty Assist is doing it, so why do we have to? And I really like what Lofty Assist is doing here as far as you can see your top 10 properties by invested amount, by value, by top income generators. Like he's we've got some good info here. I don't know. I know I complain about Lofty a lot. I want them to do better. I would love it if they got to a position where they could launch properties. Those properties were great deals. They were well vetted. We had a lot of trust in that they were what people said they were. It'd be a huge game changer for me. I'd start buying stuff on there, but it just doesn't seem like that's actually going to be what happens. And so then it comes down to having to trust the individual operators that are bringing stuff on there. Which can happen, but much more slowly, right? Obviously, there's a lot of people that trust Earl, and he still ends up bumping heads with Lofty over operating reserves and tokens that don't get burned, or all sorts of different things, right? Like there's just a friction there that is even some of their the better operators on the platform still have to deal with the software and everything that Lofty is providing them to report things and their rules. And, we just never know when things are going to change as far as like, oh, okay, now we freeze trading once there's just a vote to sell a property, which is absolutely absurd. Anyway, I think that's a long enough Lofty rant. I know you guys have probably been missing it because I haven't complained about them in a while, at least not in a full video. Let me know what you're doing. How's your portfolio going? Are you making money too? I'd love to hear from other people that are doing really well on Lofty. or that have a much different opinion than mine, right? Like, there's quite a few of you guys that have like basically committed to working, like S&P property management, right? Like you guys are a couple of people that are basically, what do they call it? I don't know. But like tying your future to the future success of Lofty to a certain extent, right? Trying to grow within the ecosystem first. And I just don't know that I'd want to do it, And I mean, like Waylick did the same thing, right? Like he's built out a property management company just to manage Lofty properties, and that didn't go so well at first. And I don't know, maybe he's going to have a resurgence, but I think that's been a real struggle. And Earl seems like someone who would make money in real estate. Like he doesn't need Lofty. I don't think he does, right? Like I think that there's like plenty of more conventional ways to finance deals and raise capital. Maybe it's become like I think, and this is not to criticize or anything, but it seems like maybe it's just become the path of least resistance for him as a way to capitalize projects, which is fine, right? But I think that there's like sometimes I feel like Lofty doesn't deserve a lot of the operators that are on here, right? Like they could all just make money doing these things on their own. And just happen to have like tied themselves to this platform that, I mean, it's just not that hard to make money in real estate, right? And it is, it doesn't have to be as difficult as it seems to be on here. Anyway, that's it for me for today. I'm just tired and just rambling. So until next time, I'm just going to keep making mistakes so that you don't have to.